investment banking, as you know, and in equities, and decided really to start Signum to work in this intersection of video games and media meets blockchain and crypto and Bitcoin, and all things related. And I have to say, I know that I think you're amazing, but there are so few investors in the space who are just as deep in gaming and media as they are in crypto and blockchain. So anyway, how did you get to this place, Sam, in terms of, from your background to here?
Yeah, well, first of all, and thanks to Howard and Nick and everybody for having us. And just as fun to get to do this again. I feel like this is in the pandemic. You and I have been doing the rounds of some great panels and conversations and things. So it's always so fun to be on with you. I always tell people my path was like, I was in traditional media, and I'm a lawyer by training. And then when I finished law school, I actually started a business during law school, producing and financing film and television shows, and spent most of my third year of law school out in LA. And it was just kind of a natural fit. And I got out there, and it was kind of a debt financing business at a time when alternative financing for independent films was somewhat new, and went fairly deep in that. And along the way met the first of one of my really long time business partners, a guy named Michael Lambert, who had been an executive at Fox in the early days of that network, and one of the people really responsible for building the Fox network, and then went on and bought a bunch of television stations really successfully and built movie theater chains all over the world. And so he brought me under his wing. And then from about 2005 or 2003 really to 2010 or 11, I always say, like, if there was a type of media that was in secular decline, I was probably involved in building a business in it, and or operating something. I mean, we were doing TV stations. We rolled up a bunch of record labels. We built two chains of movie theaters. One was kind of a growth business, kind of a high-end movie theater business, and then the other was a very traditional private equity deal. We bought two National Amusements and another chain called Rave Cinemas, and built a large chain of traditional multiplexes. And so we were just doing everything old media. We had bought half of a company called Village Roadshow Pictures, which is a film financing business with Warner Brothers. I think if you were doing traditional media, and I was mostly a content person. I got into it because I loved content. I loved film, and I loved television, and wanted to work in the space. I think if you were doing anything like that between 2000 and 2010, it was impossible not to pay attention to what was happening on the digital side. And so for me, we were doing movie theaters, and meanwhile, I was spending all my time thinking about, YouTube had launched and the iPhone had, it just felt to me like, wow, we've got to be more focused on technology and more focused on digital. And so we had one company that I was able to kind of put a circle around some capital on the balance sheet and started to make some venture investments, like early stage venture investments in digital media initially, and stuff that was really kind of right at that intersection of media and tech, in a somewhat traditional way. So streaming video. And then I got into VR and AR, and I think it just kept pushing more and more to frontier technology. And I was living in LA at the time, and I invested actually in my first video game studio in 2010, and it was mainly just out of intellectual curiosity and a love for media. And that's when I got exposed and was lucky enough to meet some people that were early on the crypto side as well. And I mean, I remember people like Brock Pierce and the Winklevi and other people like in my house telling me to buy Bitcoin when it was, at one point $1 and at one point $12, and and I resisted for a long time, and then started to buy Bitcoin in 2013, and just went down the rabbit hole of crypto. And that's kind of where I guess it was 2015, 2016, and at that point I had a bunch of sort of portfolio companies in emerging technology and VR and AR, and I had this interest in crypto and blockchain, and I met Mike Novogratz, my business partner now, and we just really bonded initially socially, just around our joint interest in both in both media and blockchain. And as we started talking, I originally I moved from LA to really to run venture for what was going to be his small family office. There were 5 of us, and we were just going to really like run a family office and invest in the stuff that we love to do. And within 6 months, the big bull market in 2017 had started, and next we had plans to launch Galaxy Digital, which is, a blockchain and crypto focused merchant bank that Mike and I and a couple partners started. There's a long-winded story, but basically this is the evolution. And now here we are talking about gaming and blockchain. And that was, as we launched Galaxy Digital, at the same time we were really seeing like what was happening with the video game industry in particular. And suddenly this for me, it was like we were coming back full circle to, wow, there's like this intersection of content, tech, also finance, which I think is really interesting and important, and I'm sure we'll talk about today. All of a sudden it just seemed like, okay, I can be a blockchain generalist, or I can take everything that I learned and experienced on the media and content side and actually really narrow in the focus and try to look at like blockchain and gaming and digital objects and really interactive content broadly as the tip of the spear of where I believed then and still believe we're going to see the most interesting mass adoption of blockchain tech. And so one thing led to another, and we decided to really narrow the focus around interactive content. And now I started a division of Galaxy Digital called Galaxy Interactive, and we focus exclusively on venture investments in interactive content and technology, and have invested about $200 million over the last couple of years in the space.
I mean, you act like it's just so logical to go from one to the next, but not that many media people make the leap. I mean, when I was at Guggenheim, I was in the old media world, and I hosted a conference, the first Bitcoin and crypto conference at Guggenheim, and nobody at Guggenheim came. It was a lot of really interested investors and really great companies and founders, but I found that it's harder for media people to make that leap into emerging technologies. So anyway, here we are. So let's talk about gaming, because that's really where it all started. You and I have talked about this a lot in the past, and I think it's I think it's a very natural thing to understand if you're into the gaming world, to understand kind of digital assets. But what are your thoughts on that?
Yeah, I mean, I think it's definitely not a coincidence that so many of the real pioneers of the crypto space came out of the gaming world. And certainly we've talked about this before, but I mean, it was really in games that people started to imbue these digital objects with real financial value and significant financial value in a lot of cases. And actually, it's literally many of the same people that were pioneers in the world of in-game objects and the marketplaces to buy and sell them that went on and were evangelizing Bitcoin 10, 15 years ago, or 12 years ago, I guess, at this point, right from the beginning of Bitcoin. And before that, there were other cryptos that this same crew of game entrepreneurs were looking at and exploring. And I mean, some of it came obviously out of the crypto, sort of deep tech and areas of tech away from gaming. But I think the pioneers that I think of most in the early days of Bitcoin, and then by extension into other protocols, had their origins in gaming in some way. And a lot of the investors that were willing to get behind blockchain early, I mean, even guys, like the Bart and Brad Stevens with Blockchain Capital, who had one of the first really dedicated blockchain venture funds out there. And I was lucky to know them for 5 or 8 years before they launched Blockchain Capital. And they were the first guys with Brock and others that were really talking about this. And they were game investors. And you think of Brock was a game entrepreneur. And there was that whole crowd of people that were really the early evangelists. And there was games like World of Warcraft and EverQuest and so on. And I think that was definitely where we started to see this movement. And then, I mean, for me, the first investment that we made out of the current fund that I'm investing was in a game studio as well. And actually, you and I share that one in common with Mythical Games and John Linden. But that was a great example of blockchain or gaming entrepreneurs that were coming in and exploring the space because of what they'd seen in terms of these in-game economies.
Yeah, I always go back to World of Warcraft and gold, selling gold on eBay and all of the kind of game currencies. It's kind of like that behavior was already adopted by the mass market. So it was easy to see kind of merging onto the highway in crypto with the same kind of behavior. So, but let's talk about Mythical. So we share a couple of investments, Async Arts most recently, but Mythical is how we met. And, it'd be good to hear just, I actually have never asked you how you guys met, how you met John Linden and why you decided to invest in Mythical initially, even though you are the lead investor and we got to know each other around the company. So
Yeah, Mythical was, I mean, it's a funny small world story. And I now have a couple of these in our current portfolio of entrepreneurs that I had been involved with previously and then backed again. But John was the first company we invested in first game studio we invested in out of this fund. And um, the first game studio that I invested in 2010 was a studio called Seismic Games, which got bought in 2016 by
Right.
Niantic. And it was an interesting one because the founders, John was not one of the founders of Seismic, but he was brought on in 2013 or 2014 as the president, and really came into that studio with an incredibly like powerful combination of commercial sensibility and sort of the ability to really manage and build a studio with, I think, the best best product sensibility and best sort of just he's just one of the best product people I've ever seen. And he's been in games, and he's been in digital advertising, and he's been in the user acquisition and all these other areas in different forms of businesses in his life. But he just came in and did such an incredible job with Seismic. And so when he came around a couple years later, they'd sold Seismic, and then actually it wasn't even maybe a year later, he decided not to stick it out there for the duration of his earnout, and he really had this idea that it was time to build a AAA game studio that was focused on the true ownership of digital objects. I mean, that was what before the whole NFT thing, which we're going to talk about now, and before we started calling all of these things non-fungible tokens, and that came a little bit later. And was like, the title we gave these these digital objects that you can own. But prior to that, it was more, the thesis was like, blockchain technology will change the way that we understand and interact with digital objects. There is no, and going back to the point we were just talking about, there is no place where digital objects are more relevant or important than in games. And John just basically said, we're going to build the best game. We're going to build the best game studio first. And that's an important point. Like, he was not talking about blockchain being the driving part of the business. It was a tool, and he always viewed blockchain as a tool that would enable him to do things with games and with the objects in games that he had ever been able to do before. But his pitch was that he's going to build the best AAA game studio out there, and it's going to be a very technology forward thinking place. And I mean, John so well, and you invested yourself. When John has a great idea and pitches it, it's pretty tough to say no. So that it was an easy.
It really is.
How about you? I mean, what was because it's funny, I guess we really haven't had this conversation directly, but what was it for you? How did you meet him, and what was it that inspired you to invest and really roll up your sleeves? By the way, you're one of the most active, like, hands-on and value add investors that I've seen in our portfolio companies. So
well, I have so much fun with Mythical. It's I'll tell you what happened. My first project when I left Guggenheim was for a big old school media company that said to me, we really don't understand this intersection of blockchain and video games. Can you go out and find us the holy grail technology that is going to, basically enable all of this tomorrow? And this was like late 2017.
Right.
And so I went out and I came back to them, I met with everybody I possibly could. I went back to them 3 months later and I said, okay, here's my big presentation. Do nothing. There's nothing to do yet, because really it was just Bitcoin and Ethereum at that point. And they just, as blockchains, were not ready for prime time in terms of AAA games because of all of the, things that we know about now. And there were no scaling solutions. And as you know, I've been working advising Web3 Foundation on the launch of Polkadot. And I firmly believe that we do need kind of, almost meta protocols or another layer of software that allows, for speed and for communications between chains that is super seamless and simple. But anyway, so didn't invest, went to a demo day in LA, and John showed up, did his pitch. And I thought what I had just come to the conclusion of was that cryptographers I had met basically thought video gaming was really easy. They thought cryptography is hard. Video games are, I can figure out video games. And right. I felt, wait, they don't understand. Video games are actually really hard. It's like, creating something that the masses are going to adopt is really, really hard. And what I found with John that was so exciting, he was so excited about blockchain, so excited about crypto. And then he also had sold the 3 of the top 10 revenue grossing games in history through Call of Duty. So I thought this guy probably is a great combination.
Yeah.
So yeah, so that was
Yeah.
pretty much it. So we
that's really it. Like that, John's the guy that knows how to build, how to design, build, ship, operate a great game. And if you take that and you mix it with the vision he's had for tech, good things will happen.
yeah. And
So
the other thing that
it's funny. It's not an interactive conversation here, so we can't really. Oh, sorry. Go ahead.
Oh, sorry. Is there a lag? There might be a little bit of a lag.
There's a
So
little lag, I think. Yeah.
okay. So one of the other things that John talked a lot about that I was excited about was just this whole trend or theme toward creativity and creativity in game and developers having more control. And I think that, we've all been seeing developers coming to the front of the house, creators coming to the front of the house, artists coming to the front of the house. I mean, we've seen it in the NFT space massively recently. From Trevor Jones selling art for $200 6 months ago to now selling for $3 or $4 million. I did the numbers today, and they're already outdated. So one data point that I thought was really interesting.
I know. I feel like we can't.
Yeah, the Ethereum, aggregator OpenSea did 5 million in October, and then over the last 2 weeks did 40 million. So I thought that was a big number. Then I find out today Dapper did 40 million today, and 132 million over the last 7 days. So it's hard to keep up here, but where do you think we go from here? Is this a bubble brewing, or is this just the new norm?
Yeah, I mean, you can't recite numbers like you just said and see this. And I'm with you. I feel like I wanted to check the second week before we got on here, because I thought like whatever numbers we threw out, even just having not checked since midday today, could be off by a meaningful percentage. I mean, it's insane what's going on here. I would say impossible to believe that we're not in a bubble with at least with respect to the sales prices of specific NFTs. And this is where I think it's really important, right? Trying to identify today which NFTs to buy, and you see this run up in prices. And obviously, I mean, Top Shot is unbelievable what's there, but the same with the digital art. And we'll come back to talking about some of these artists. So yeah, for sure, there's a bubble in the prices. And only a bit of that is really driven by a genuine interest, I think, even in art or even in what these people are buying. I think there's a retail gambling induced frenzy going on here that we've seen before, and I don't think that will end well for a lot of people on specific NFTs. So yeah, probably a dangerous time to try to figure out which NFTs to buy. But I feel pretty certain that we're heading in the direction of really the tokenization of all digital objects. Like I don't know why tokenization and this in NFT wouldn't be an intrinsic property of everything that's digital. It's one of these things where once you see that there's a technology that just makes digital things better, it makes creating digital things better, it makes owning digital things better, it's just a fundamental change in how we think about digital content. And again, that's a big statement and a big conversation we'll come back to. But if I believe that, then I think I also have to believe, and I do, that in terms of the overall size of the NFT market, we're just getting started. I mean, this is a drop in the bucket, what we're seeing here. But it's going to take some time, I think, to play out in terms of which creators really matter, which platforms matter from the perspective of where you buy these things and how we're accessing them, what people care about. But ultimately, we're now firmly in, and I mean, you and I know, I've talked about this, like we both believed we're heading in this direction for several years, but I think we're now just starting to see some evidence of that thesis playing out, and we got a long way to go here. So
yeah, I mean, I was just looking at the overall art market and how big the art market is relative to digital art, and I was really surprised to see. So digital art, I mean, overall art market 64 billion. Really over, if you look at the auction houses, from 2013 to 2018, so over 5 years, they only did 2 million of digital art. So digital art was not even a thing,
yeah,
because people just didn't view it as real. I send you a picture, you have the picture, I have the picture. You know, there's something else going on here. And, you know, I don't know if it's just proof of ownership. I don't believe it is. I think it's more about status. You know, there's a lot of things going on here. What do you think is really driving this?
yeah. I mean, I absolutely. I mean, first of all, I do think this particular wave, again, just going back to that point about gambling and the money game that people are playing, like there's a part of that for sure that's driving it, and it's the fact that there are, you know, people believe they can buy these things at one price and sell them for more later, and that is like has nothing to do again with the underlying asset. I think for a lot of what people are buying right now. And so yes, digital art is up, but all forms of NFTs are up, and it's just because, you know, there's a frenzy going on. But that being said, the thing that ignited this frenzy, and your point about digital art is a great one, because for sure it's been around for years with no real interest from anybody. And so the digital ownership is part of the story that changed. I completely like that is a that all of this stuff seems to be about story, and in the case of whether it's NBA Top Shot or it's the art that's been selling, like that is the feature of blockchain that people have latched onto first. But I mean, you mentioned status, and I say status, and I sort of say and talk about community in a similar way, and I think something much bigger is going on in that regard. And I think I think it's actually far less about true ownership and far more about the generations that are really driving a lot of the boom in these NFT purchases. They're the same demo. I mean, we have some companies that are very much not digital object companies in our portfolio. We're investors in a company called StockX, for example. And StockX to me is like, I mean, they are selling collectible physical sneakers now. I mean, we can, you know, they're going in a really interesting direction, and talk to me in a couple of years, and it'll be interesting to see like what the digital object business for StockX is. But right now they're selling physical items, mostly sneakers, and other streetwear and other collectibles. But like you've seen through this pandemic in particular, but also through the 3 years or 4 years of the company's history, I mean, just an unbelievable growth rate. And I think it's exactly the same thing that's driving the NFT boom. I think people now, it used to be, and there's really no difference in the motivation between you know, generations ago of people buying physical art and putting it on the wall and using it to you know, to tell the people that come into their home who they like, what they care about, how they support this artist, you know, what they can afford to buy. I mean, these are all the status things that people have been playing forever. Same as people who would buy an Hermes bag and bring it to dinner and sit at a dinner party with their new bag that they paid $10,000 for. I mean, this is nothing new. The difference, and why a business like StockX, I think, is through the roof, even through a pandemic, and even at a time when traditional high-end luxury goods like Hermes are struggling, like the difference is the kids and the demo that are buying StockX shoes, or on StockX, I should say, or buying digital objects and NFTs, their opportunity to display status has exploded in the last couple of years, and in particular, even in the last year, right? And as people are locked in their home, and like their home in this case, and and it is everywhere. And the reach and the number of people that are able to come in and see their home in this digital world is millions, tens of millions, billions in theory. And so from their perspective, you know, they don't feel like, oh shit, why am I going to buy this? Why am I going to buy this bag? Nobody's going to, because we're not going to dinner parties anymore. They're like, yeah, I'll buy the shoes, and I'll buy the you know, the game skins, and I'll buy the digital art, because I've never had a better opportunity to support things I care about, to identify myself by virtue of the things that I'm buying, to really build my brand. And by the way, it turns out that I'm building this brand, and all these ways are being turned on for me to monetize that too. So now I'm an entrepreneur, and now I'm a creator, I'm an entrepreneur, there's all of this is going on. And this is a demo that I mean, I'm just within reach of being able to understand this stuff, I think, and participate in it. And in some instances, and in some of the places where it happens, like I almost am like just too old and missing the chip to even figure out how to really play where some of these worlds and things are happening. But it's so incredible to witness, because I think it's the only way we can explain a lot of consumer behavior that otherwise, to people who haven't really dug into this, just looks inexplicable.
Yeah, I agree with that. And I think the communities that are developing are just incredible. I've got, I wanted to talk about social tokens and community. And I think that we're wrapping up here, but I'd love for you just to maybe end on, I want to end on your favorite game, because I've never asked you that. But what do you think is going on with social tokens, and why are they, why you started RNG, you guys started, and you're doing it on Discord. So talk about that.
Yeah. All right. So the big idea in 2 sentences or 3 or so. I think the point to take away from all of this, and it's such a longer conversation, but we're dealing with this creator economy that's all about status and making things and monetizing the things that you make. I think what we need to recognize, and this is true of NFTs broadly, the creator economy is not about, or at least not solely about, making things, right? It's equally about making communities. And so what you're seeing with these social tokens, the best I can explain it and understand it for myself, is we're just tokenizing a community in the way that you would tokenize a piece of art, or you would tokenize, any other digital object. And so these are digital communities. And there's a wrapper around them. It's sort of the way to think about it. And if whether we're talking about art, music, game creations, communities, whatever these things are, like what NFTs are doing, are bringing people together around these ideas. They're bringing fans and artists together around a piece of work. They're bringing people together around a shared, or either a shared sense of identity, or an opportunity to debate each other and around a particular idea. But that's what we're doing, and we're tokenizing people's ability to create things of value, whether those are experiences, or whether those are physical objects, or whether those are digital objects. And that's like, when that's done, and it creates this virtuous cycle, because now in those things that get tokenized, really what's happening is you're just making everybody an owner of this thing with an incentive to see it succeed. And so that's why when it's done right, you just see this virtuous cycle of people getting excited and making more, and then the things that they make become valuable, and they can go, they can literally see that, and they can participate more. And it's creating a certain that I just think is unprecedented.
Hi, Howard.
Hey, so this is a great discussion.
Hey, Howard. Sorry, did we run over?
No, this is a great discussion. So I felt like this was a more relaxing discussion than a lot of the other ones we've had, because you guys were talking about games and fun stuff, and instead of the financial system. So it was a nice change of pace. Plus there's the fireplace going. So
the fireplace.
Yeah, that was a little bit calming. But great session. I think we're out of time, so we got to run to our next 2 startups. But thank you so much for joining us.
Thanks for having us. Angie, thanks so much. I really enjoyed it. See you guys.
It was a lot of fun. Thanks, Sam. Bye, Howard. Thank you.
All right.